Hi, Duane Duggan, RE/MAX Boulder Video Podcast. Today we have Jessica Shanahan with us with Premier Lending, who is an affiliate here at RE/MAX Boulder. Jessica, thanks for being here.
Thanks for having me.
We have a bit of an exciting topic today. It is reverse mortgages. Not that many people have heard of reverse mortgages, so let's start off with what is a reverse mortgage?
So a reverse mortgage is a way for seniors to tap into the equity in their home when they still have the availability to use it. It eliminates a monthly mortgage payment, so they don't have that expense, and they can use it as a refi or to purchase a home.
Okay, and at Arby's, it's 55 years to get a discount on your beef sandwich. So how old do you have to be to be a senior to get a reverse mortgage?
You have to be 62,
Okay.
so Arby's has a beat. That's great to know.
Right. So 62, have to be 62, and you have to have some equity in your home, right? Mm-hmm. Okay, and so
quick clarifier on that.
Okay.
I just want to mention the one borrower has to be 62. So if you have a younger spouse, but you're 62, we can do it that way also.
Okay.
Yep.
And why would a senior want a reverse mortgage rather than a forward mortgage?
Well, the reverse is going to eliminate a monthly housing payment. So
Okay.
I think for most clients, that's the biggest benefit, is they don't have that monthly housing expense anymore. A lot of seniors, not all, but a lot are on a tight income, fixed monthly income. And to get rid of that monthly mortgage payment is huge. It frees up a lot of their finances. Other things that you can do with it, I had a client that bought a second home.
Okay.
Bought a place in Arizona, and with cash. He took the equity out of his home on a reverse mortgage and purchased that property.
Okay, and that brings up a topic. You can take it as a lump sum,
Right.
which is apparently what they did.
Yep.
Or take it in monthly payments,
You
right?
can.
Okay.
Yeah, you can. And what's cool about it is there's a big mathematical equation that goes into it. So the reverse company figures out how much money, depending on your age and the equity in the home and everything else. But the thing about that I wanted to mention is that they will let you take 60% of whatever the amount you're allowed. Then the rest of it goes into an account that just gains interest, and then you can take the rest of the equity out after a year.
Okay.
And the benefit to doing that is that it saves some cost up front.
Right.
And I know you're going to ask me.
How much does it cost to get a reverse mortgage? We just kind of segued right into that.
So it's more expensive. It is more expensive because there is an origination fee that you just kind of can't get around. FHA regulates this entire program, and these are the fees that they put in place. But the cost cuts in half if you take only 60% of your equity and then wait a year to get the rest.
Okay. And so it would be possible if there's enough equity in, like when an elderly couple's downsizing, to pay off their old mortgage, get into a new house, buy the new house, and still have the reverse mortgage in place where they still have money coming in if there's enough equity there, right?
Absolutely.
So it can be used to fund retirement. It can be used to buy another place. Or like you said, if that's the lump sum option that they take, they could use it to buy another place.
Yeah,
so
absolutely. There's so many things you can do with it. So it's really not, I don't think it's what it used to be.
Okay. Now, one of the concerns I've had at the kitchen table telling people about reverse mortgages is that the heirs are nervous about their parents getting a reverse mortgage because it is a negative amortizing loan. So what happens if it is going up in the size of the loan and it goes over the value? What responsibility do the heirs have when the parents are gone and they get the house with a loan bigger than the value might be worth?
Sure. Well, the great thing about that is if you are in the situation, FHA will just they'll really take over for you, so the heirs have no financial responsibility. But it also works the other way. If there is still equity in the home, then the heirs can step in, sell it, and take the proceeds like they would anything else.
Okay. And I know that there's some type of course or some education required. What happens there, and who does the education, and how's that work?
So HUD actually does the counseling course. It can be done over the phone, so it's not like the senior needs to go in anywhere. I mean, they can just take it over the phone. And also we have people that this is what they do. They're like reverse mortgage gurus who will also walk the client through the process.
Okay. And then the typical mortgage is maybe 30 days, 45 days to get approved. How long does it take to get a reverse mortgage approved?
So if it's a reverse and it's a purchase, then they are gonna follow those contract deadlines. So 30 to 45 days.
Okay.
But if it's a refinance, then obviously the purchases are gonna take the priority. And so reverses kind of fall to the back, and they're about 45 to, or the refis, excuse me. So they're about 45 to 60 days.
Okay, and so for the elderly client that doesn't have a job or really much income, the sole source of qualifying is the amount of equity in the home, is that correct?
It really is, yep, exactly. And then they'll look at, they want to make sure that they have enough money to pay their property insurance and property taxes.
Okay.
So there does need to be a little income there, but even if they're not taking draws from an IRA or something like that, the reverse company will look at their assets and count them towards qualifying.
Perfect.
Yeah.
Okay, sounds good. Well, if somebody wants to talk to you about reverse mortgages, how do they get a hold of you, Jessica?
Sure. So our website is www.premierlens.com, and you can reach me directly at 720-833-7964.
Okay, Jessica, thanks for being here with us today. Appreciate your wisdom. Duane Duggan, Remax of Boulder Video Podcast, signing off.